Thank you very much. Thanks, Jamillah. I think
Thank
we're in
you.
business. Sorry,
We
slight delay
already-
there. Few logistical hiccups as usual on these things.
Yes, as is.
Right.
So I would like to, first of all, thank Simon and welcome him here today to talk a little bit about Qodeo. Simon Glass is the founder, and I was very pleased to have met him while he's in Bermuda. And basically, this is a matching platform for entrepreneurs and investors. So we're really excited about that because, as you know, in Bermuda, we don't have anything quite like that here. Primarily, what we see in terms of getting capital to our entrepreneurs and small business owners is debt financing. So this is very interesting and appealing to us. We would like to know more, and hopefully those of you who are on the call may actually get to utilize the platform and see the benefit of having access to investors all over the world. So without further ado, I'll turn it over to Simon and let him fill you in on Qodeo.
Thank you very much. So thank you, Jamillah. So Jamillah here is, if you didn't know, the Communications and Development Director of BEDC, which is the Bermuda Economic Development Corporation.
That's right.
And we met a few weeks ago, and we decided to do a webinar here, both for folks in Bermuda, where I am currently before entering the US the next few days, and also for people globally. So I think online we've got folks in as far away as India, New Zealand, across the US, Europe, etc. So,
okay, awesome. So my assumption is that these are all Bermudians, right? So they know me, right? But thanks a lot for that. And like Simon said, I represent the Bermuda Economic Development Corporation, and our primary role is to support entrepreneurs, whether they need educational support or financing. And like I mentioned earlier, primarily it's debt financing through us. So we're really excited about the opportunity that maybe Qodeo can present for our entrepreneurs here. So thanks for that.
Yeah, so thank you. So we've got entrepreneurs, your own folks who
Yes.
sign up for this today. And this follows a similar event we did with Ignite, which is an accelerator here I mentor at here on the island. But it's obviously of global interest. But I thought, obviously this is a regular presentation Qodeo does to our stakeholders and to our subscribers, etc. But we thought that today, maybe as I start, we might explain a bit of context also around what is venture capital and private equity, so folks here can also understand how to interact with that space as well. So what we'll do is we'll go through a presentation which includes both PowerPoint and video, which hopefully will work seamlessly today. There have been a few outages on the Wi-Fi, so hopefully it's stable. And what we'll do is we'll go through this, and then as we go through it, at the end, we'll show a video, and at the end, we'll be available for Q&A.
Great.
And some of the Q&A I think might be coming through from one of my colleagues who might be sort of able to send that through to me or voice that through. And otherwise, we'll just see what Q&A there is on the chat. But we'll do that once we've gone through the presentation, perhaps, if that's okay. So we should run from about now, which is 4 p.m. roughly Bermuda time, 3 p.m. the US East Coast, 8 p.m. in the UK, 9 p.m. in mainland Europe, and later, early morning in Asia and Australasia. We'll go for about half an hour probably with this, and then we will be available for Q&A and take it from there.
Sounds good to me.
Just so everybody knows, everybody on this call is entitled to 50% discount off our service, which we'll tell you about, our matching service with entrepreneurs and venture capital private equity firms. So it usually starts from just $9.95 a month. So about a $5 a month tariff for 3 months, or for annual subscriptions at 50% tariff. But we're obviously trying to see if we can do other things for BEDC members as well.
Yes.
So some of you know me already. I'm the founder and the CEO of Qodeo. And I founded this business. There we are. Clickers there. I found this business a few years back with some colleagues, and really to solve problems that both the entrepreneurs and the venture capitalists and private equity firms are having at the same time by bringing them together in a community. I'll start off perhaps with a video, and hopefully the Wi-Fi will be robust enough for that. I'm just going to click down here. Sorry, we're just having slight issues here on the clicking. There we go. So this video here is a little story about how Qodeo works, and hopefully everybody can hear this audibly.
Did you realise the average entrepreneur and investor relationship lasts longer than most marriages? So you want to make sure you find the right match. Just like in love, there's a perfect match for entrepreneurs and investors. Qodeo automatically matches entrepreneurs with best fit investors, saving you time and money kissing frogs. Revolutionising the way entrepreneurs and investors match and get funding, businesses of all sizes can set up a profile in just 5 minutes and gain access to a world of opportunities for just $9.95 a month. And for a little more, Qodeo's concierge service can help you improve your profile so you attract the right investor even faster. Whether a startup or an established business looking to evolve, Qodeo connects you with opportunities far beyond your own traditional network. Always on the hunt, Qodeo instantly notifies you when your preferred match is found. No long courting process or middleman required. Qodeo helps you confidently connect directly with best fit investors worldwide, giving you access to more than 1,800 leading venture and private equity firms, pre-vetted by 30 of the world's top business schools. Qodeo matches you with the right funding, fast.
I hope that was a good introduction. We're going to go on to the next page, if that's okay. Next slide.
Did you realise the average entrepreneur?
Don't need that again. So on the next slide, I'm just going to admit some more folks in who have just come in online. Just didn't want to do that during the video, if that's okay. So hopefully we can admit some more people in before we carry on for that. And obviously this will be on the recording later on. And if you want to put any questions through, if you want to put them to the chat, and you can share them with myself as the panelist, and also with Monica in our team, who is going to be sort of helping manage on this process. Just also, if everyone make sure they mute themselves, as this is done as actually a Zoom call rather than a webinar at the moment. So if people online can just make sure they're muted, so we don't get any sort of interruption of dogs and pets and family, etc. in the background. So thank you. So to carry on, so that was obviously a bit of an intro video about what we do, and there are extraordinary sort of similarities effectively between sort of dating analogies and raising funds. And there are many things in life that are remarkably similar, one learns. You know, it's a bit like if you want to go and sort of go out dating as a single person, you generally tend to float around other single people rather than people who are married, although some people do float around people who are married. Not really the best practice as far as we're aware. And very similarly, there are horses for courses in venture and private equity. And so it makes sense to meet the right people at the right time when they're available. And that's what we're trying to help do from Qodeo's perspective. So we're trying to marry up literally investors and entrepreneurs of all stages and sectors at the right time as suits them. And I'll go and explain a few tips here for how to find your dream investor. Many of the things noted here are relevant whatever stage or sector you're at. So if you're an early stage business trying to raise initial money from initial folks, it's quite similar factors pertain. And the more you go along the kind of institutionalized or sort of professionalized funding chain, the more these factors become relevant. But whether you're talking to a business angel, who is a kind of person who may fund you at the beginning of your journey as a business, or a venture capital firm, or corporate venture, which is kind of a professionalized early stage funder, or a private equity firm, which we also have on our platform, which is more focused around later stage businesses, so existing businesses with turnover and profits, etc., trying to grow. Any kind of growth businesses, interacting with investors need to think of these kind of things. Although at the moment, Qodeo's main focus is around venture and private equity funding, which is business got off the ground a bit. Right. But if you're in the early stage pipeline and you're sort of looking to go to future funding, it's worth bearing this kind of stuff in mind, because what these comments will be relevant to you. And we are adding more functionality on Qodeo for business angels and family offices over the next year, which are earlier stage investors as well. And it gets you in the pipeline, gets you the knowledge effectively.
Yeah, it makes perfect sense to know what you ultimately want, right? And so if you can get in early and understand what is required and what types of questions you need to answer, I think it makes perfect sense.
That's right. So just to go a couple back here. So the tips for finding your dream investor. One of the things we'll talk about today is impact of COVID. There have been both positive and negative impacts to entrepreneurs trying to seek funding. You know, basically, obviously, we try and suggest everybody goes on Qodeo.com, sign up as an entrepreneur. And one of the things we do say there is to make sure you update your profile regularly, because the way our system works is that whenever you update your information, or whether investors update their information, the algorithms in our system automatically spin and create new matches. Okay. So very much like the dating analogy, it's not static.
Yeah.
So some people come on and off the market. And very, very similarly, venture firms and entrepreneurs coming off the market.
Right.
You know, entrepreneurs have raised their money. They don't need venture firms at that particular time. They want to see, you know, who's who in the zoo and what opportunities and pipeline there might be, and then come back to them at the right time. So it's all about timing, about making sure you focus your fundraising process at the right time to the right people, hopefully, and run your business yourself instead of having to try and get to spend your whole time raising money.
Yeah,
which is a huge.
Somebody needs to work on the business, right?
Exactly. So we talk about updating the profile on Qodeo just because it's very important to keep your profile live and updated. Like LinkedIn, like Facebook, on social media, people do keep their feeds live, and the more live they are, the more activity you will see comes through a platform like ours, and also to generally be more aware. One bit of best practice we have here is don't bombard VCs, and that relates to how our service works as well. Nobody's perfect. We're not always perfect ourselves either, because many of our notifications when matches occur in our system, so automatic matches occur in our system when they're relevant, do get emailed through to VC and PE firms, and we're working on how to ensure those happen at the right time. Because some VCs, so they get 1,000 emails a day trying to raise money. So if you can imagine 1,000 emails a day, many VCs simply don't go on here. So just
definitely testing your multitasking ability.
I know this is interesting because of COVID. We have to sit separately here, and we have to cross here. Even though Bermuda has very little COVID, and I've had the vaccine, we still have to be careful about sitting so separately to focus. Etc. So just for the people coming in, you missed it later, but just to mention that we've only just started, and make sure you try and mute your speaker for the moment, obviously not the video necessarily. And what we'll do is at the end of the presentation, we'll try and find a way to manage the through the chat to sort of help with some of your questions.
Right.
So tips for finding your dream investor, and what are those? So one of the things you have to realise in raising money is that, so I'm just going to try and move the screen around again. It's kind of interesting juggling this. One thing you have to realise with raising money is that you have to think about what the other side's interested in. So a lot of entrepreneurs think, well, everybody's bound to be interested in their opportunity.
Right,
well, not everybody is. And again, there's some people with industry experience might be able to lend some expertise. Other people might not be able to. It's like selling. I mean, when you're trying to raise money, you're effectively selling yourself and your proposition. And obviously you don't want to oversell. Sometimes it's better to be a bit cool about how you do some of these kind of things. But you know, you've got to understand that on the other side of the table, particularly with professional investors like venture and private equity firms, that they are seeking a return themselves. So like you want to make your business bigger, they have to make their own businesses bigger. And in most cases, most venture and private equity firms raise money from what we call limited partners. They are pension funds, in Australia they call them superannuation funds, sometimes some wealthy people. And they give or lend, effectively, they provide the money to the venture capital firms themselves over potentially 5 or 10 years, let's say, and they themselves want to get a return. Right. And the venture capital firms get their bang for the buck, their biggest return financially, from selling, what is called exiting, the business they invest into. So you've got to understand the other side of the table, those folks looking up and down saying, well, if we back you, we're not giving you money, we're investing money. We're investing other people's money in most cases. So are we going to get those clients of ours effectively a return? And lots of entrepreneurs don't really realize it. They just think that venture capitalist money sort of falls from the air, but it doesn't. I've raised money for a venture capital firm. It's hard work. They have to raise their own money, like entrepreneurs have to raise their own money.
That's interesting. It's interesting. Yeah.
So most entrepreneurs think, oh, well, the pot of money's come from somewhere. Well, it's come from your pension, for instance, where a percentage of your pension is allocated into investing in venture capital firms and their investments. And those pensioners want a return. That's right. So when you want to get your business back, you've got to understand they're in a chain. You're in a chain effectively, and they're in a chain, and you have to help them out. So they have to get returns, and they have to get returns by seeing your business is viable, and will get them an exit, it's called a sale, at some point. And if you're not looking to sell your business, then potentially a venture or private equity firm may be much less interested in your business, because they need to sell their stake in your business a few years' time to make money. Business angels can be slightly different. Business angels tend to have much more personal interest in what they're doing, and they obviously want to get a return in most cases, but they may take a more personal interest in why they're getting involved in a business than a slightly more analytical approach that like a venture capital or similar firm might take. So that's the first point, really. The first point is around trying to make sure that you understand that on the other side of the table, there are folks trying to get a return.
Right.
And so you've got to sell your business as being a prospect for them to get a return from.
Okay, and you're going to tell us how to do that.
Well, on Qodeo, of course. Well, partly. So the second part of that then is only contact and then study the appropriate best fit investors. So, as I was saying before, you want to focus your fundraising process on those investors who are most likely to back you. It's what we in Qodeo call kissing frogs. People kiss a lot, talk to a lot of the wrong people to try and raise money, and everybody does that, and that's natural. Even when you have a short list, a lot of firms will say no for all kinds of reasons. Or business angels say no for all kinds of reasons, and you can't take that too personally. Usually, it is difficult as an entrepreneur often not to take that too personally, because
you have to develop thick skin, because I'm sure you're going to hear a lot more no's, right?
Well,
but
yes,
it's the yeses that count.
Exactly. Well, but even the no's you learn from many cases. So there can be a no, but there's a reason why. Sometimes it's irrational. Sometimes it's just the wrong timing.
Right.
There can be market cycles. You don't fit the categories that they invest into. What we say is what's important to do, and that's what Qodeo helps you do automatically, is create a shortlist of who to speak to. So we don't guarantee that everybody on our shortlist affecting our system will fund you, but the way that Qodeo works is it does the job for you. So like if you go to the doctor to have medical treatment, we're not like the doctor, but if it's not that painful on Qodeo, but basically you go into Qodeo, you build your profile, and we will provide that shortlist for you, and then enable a certain kind of contact to be made with the shortlisted venture and private equity firms, what we call warm and hot matches.
Okay.
So we only allow you to be put in touch as an entrepreneur, or help you be put in touch with those we think are the most likely based upon the information you've given us and the data we have on those firms and our algorithms together, and that's a magic sauce, a magic pot, to spin out what we call warm or hot list matches. Those firms we believe, or those investors when we bring on more angels, etc., later on this year, are the most likely to be your investors. And that's where you need to focus, because it's like, you haven't got the time to go and talk to all these other people. So out of those 30 or 40 you might get in your list, potentially, one or two might back you. If you have hundreds in just random lists, you'll never get through, and you'll run out of time.
Nor do you want to, right? Because like you said, it's time consuming. So
exactly, there's opportunity cost involved in businesses. You've got to go and run your business.
That's right.
And so that's incredibly important. So we suggest creating a shortlist, and we automatically help you do that. Again, our systems aren't perfect, but we're getting better all the time at the way the algorithms work. And it's like, we are effectively, that's our domain knowledge. Like the doctor's domain knowledge, medicine, our domain knowledge is the funding mix and how to try and put yourself in front of the right people, hopefully. So talk to what we call best fit investors. Don't talk to worst fit investors. Having said that, some investors like to look at long list, non-shortlist entrepreneurs coming through the pipe, and they may sometimes contact what we call cool matches of the system themselves if they see what they call diamonds in the rough. So they may see businesses which aren't really kind of right now, but might be right later, and they'll want to put them on a watch list. They will be able to contact you through Qodeo or other forms, having highlighted, having shortlisted you in other ways on Qodeo in a way that you wouldn't necessarily expect it sometimes. So they might see something they really like in your business, but they might not shine out generally for being able to be funded.
And in your system, do you have the ability to create those separate lists then?
So on Qodeo, what we do, so I'm omitting the odd extra person there.
Okay.
On Qodeo, what we do is effectively, automatically, the system is constantly calculating those matches, and that may be static or dynamic depending upon when that information is changed all the time. And we will put that list forward to you, and then you have the ability to request contact with a VC or P firm, and later obviously with angels and family offices, as they call these wealthy individuals who invest sometimes, at the appropriate time. But we only enable that for entrepreneurs for those warm or hot matches, whereas the VC and PE firms or the investors can contact anybody on the system, even though they tend to do what one major VC in Boston called noise cancellation, called Qodeo for the venture capital community on this banner behind. And what that means is basically that, you'll see the banner in a second, what that means is basically that Qodeo automatically filters inbound deal flow. So it cuts out an awful lot of the noise for them in terms they can't look at everything coming in the pipe. So we're automatically filtering what's coming in the pipe, but it doesn't stop them from looking beyond what we suggest.
Okay.
Because they do have sometimes some quite unusual ad hoc processes.
Right.
So what we say here is, look, it's like dating. Note your preferences and availability before you start that fundraising journey. Another obvious thing is to make connections and networks. VCs tend to invest with those they know inside their circles. So the problem is that venture is a very small world, and there's an article on our blog actually talking about that, and that it's quite hard to get inside the trusted network. Quodeo is effectively a trusted network. Increasingly, we have over 2,000.
So by virtue of us knowing you, we can get inside
exactly.
the okay.
Exactly. So Quodeo is a trusted network, and so the idea is meant to be getting inside the tent. So
right.
It's very hard for people who didn't go to the top couple of business schools in the world to know, which dominate private equity and venture, to be able to get to know those folks. Most venture capital private equity firms, so they know everybody. What they know is quite a few people in their circle, in their town in many cases. And what actually is the case is there are so many great opportunities out there they often miss. They often miss, but by actually not seeing what's out there. And so we can bring them opportunities they'd miss otherwise. And in many cases, we've been told by VCs that they find opportunities, for instance, on our platform that would be from regions they wouldn't go to or wouldn't be connected into, or different kind of backgrounds. And that, so in a way, what Qodeo is doing at the moment, which is fascinating.
You're making the world smaller.
Yeah, well, it's flattening down those things. So if you come through Qodeo, it's kind of actually a sort of indirect quality stamp. If you're a pro or concierge member on Qodeo, which is a paying subscriber, because there is a free version which has some limited functionality, but pro is for only $9.95 normally per month. We put a little badge by you, and you slightly rise up in the algorithm also, if that's the case, because if you've paid for a service, you've taken it seriously, and you are therefore viewed more seriously by the by the VC. And so when the VCs look at you having bothered to go and build a profile, put something into a place they can see standardized profiles on, they can review your information very quickly and easily and look up that information. So it shows you made a bit of an effort, etc., to actually go in that process, and it's brought you inside a network. And we're going to bring out other networking related tools in the future as well. And it overcomes bias. So there are businesses often in places like Bermuda, like in other regional communities and diverse communities, we often have lower valuations because either entrepreneurs have lower expectations of what they think their business is worth. Sometimes too low, we have to help them obviously be realistic on that. But also there are circumstances where it's literally cheaper to build a business in a certain place, or there's a reason why it's there. And in those sort of circumstances, sometimes the VCs actually benefit from finding businesses that are at sort of lower valuations because they can get more uplift when they sell those businesses. So they got into business being built in lower cost environments. If you're in New York and Berlin and London, it tends to be more expensive to operate in those markets. So we found 80% of our subscribers coming through from entrepreneurs subscribers coming through from diverse regional communities, African American communities in the US, places like Bermuda, Malta, the east coast of Italy, as well as the London and Cambridge kind of place in the UK, as a global system, because
kitchen.
Correct. Well, I mean, it's very nice to be in the bathroom, but you're going to speak to anybody real. So we help you get in the door, and we do actually collate certain documents, like pitch document, on our system that VCs can have a look at, investors can have a look at if they want to. But once you've got in the door, we've seen some various sort of trends emerging in terms of what you should then, once you're in the door, whether it be to a business angel or a venture capitalist. I spoke to one of the, I had coffee this morning, one of sort of Bermuda's leading business angels this morning, with Don, who we both know, and who's involved with Ignite, and he was looking through. He said these comments here are exactly relevant to business angels. Just there's different shading slightly in terms of what you emphasize.
That's right.
So what are some of the tips? Don't forget again, think about what are the VCs or investors seeking. So in Bermuda, you've got a very strong agriculture sector, you've got a strong fisheries sector, you've got a strong insurance sector, etc. And so there may well be opportunities that come through those sectors. So you might want to find a successful backer who's got that background, who can actually understand the industry and can help you. Sometimes you want somebody who's got a different kind of complementary skill set in what you're looking for. So we do look at what the kind of the mix of needs might be for your kind of business, which might be more subtle than just a sector, i.e. just what kind of industry you're in. There can be other things. Sometimes investors want to be passive, as it's called. So they're just looking for the return. And it almost doesn't matter what sector they're in, but then they're really financially driven. Whereas when you look at somebody who's got experience in that sector, that tends to be somebody who can really add more value in many cases to your business. So, but also you've got to understand, don't talk to a private equity firm invest in infrastructure if you're a mid-market printing business in Malta. You know, it's there's no match. It's the same as the dating analogy. And so therefore we help you do that, but people often don't realize that's one of the key initial criteria to actually look at who to get you to back you.
I mean, it makes sense when you think about that. And I'm just wondering, does it matter what stage the business is in for you to determine who you should be going after? Like, should you be looking for that person that is, you know, going to be interested in you and want to support if you're early stages versus I just need the money. I don't need you to, you know, to share your input.
So investors tend to look at several criteria, some which are obvious and some which are less obvious. One obvious is what sector. One other clear one is what stage of the business. So stage has been a very confusing term for lots of entrepreneurs. So we try and issue away from that in our platform from an entrepreneur perspective. So we use it behind the scenes, because what is called stage means different things to different people. But principally, early stage means a young business growing. Then there's scale up, which is kind of in many cases often relates to tech businesses, which is about the growth of the business. And then you get into revenue and what kind of size of revenue. So there tend to be sort of proxies, tend to be different understandings of what those different stages of a business tend to be. And that is relevant to the investor, because some investors are higher or lower risk in their perspective. And some investors think early stage is more risky. That we've often found it's less risky, because if there are big companies go bust, you know, people think it's only small companies. And small companies are more skin in the game. So we actually found with some research in the UK that the returns for venture capital firms were often, which is earlier stage investing, were often better than private equity firms who are later stage, who are often later stage investors. You think later stage gets better returns, less risky. In fact, venture was less risky than private equity in the UK to a certain extent, because you have a lot of these big implosions of private equity-backed businesses sometimes. So the more the management has skin in the game, the more the management is close to the action, the more action in many cases they want to make it work. The more it's just managerial, people kind of be a bit hands off. So strange enough, early stage businesses we think are often more robust. But you have to understand the risk profile of your investor and relate that to the size of ticket size they do. So if you need $1 million and you go to somebody who's like a business angel who can afford $10,000, it's going to take you a long time to get to $1 million. You can piece it together, but you know, if you go to one investor, you pay a check for $1 million, off you go. So it makes sense in many cases trying to see who you need to stitch together for your investors, and so different investors suit different size of tickets, which relates to stage of business, because most early stage businesses don't need $100 million to start with, whereas a later stage business might. So that is again sort of stage, sector, amount of money are kind of important key points, but there's a lot of other stuff. The critical thing here we see is teams. So teams, or the people behind a business, are by far the most important criterion for most sectors, and we'll show you a bit later that it does vary by stage of the business. So again, how they evaluate you, and therefore how our algorithms work, varies a bit according to how developed your business is, how important teams are. So, and I'll show you some data we picked up recently in Boston with the Boston University project that shows how important that may be. And one of the things we often also highlight, and it's on the third bullet point here, is the average VC to entrepreneur relationship lasts longer than the average marriage.
That's an interesting stat.
I forgot that on the radio. I was on the radio with Jamillah the other week. That would have been a classic. Maybe I mentioned that, but basically what we see is that, and you have to spend a lot of time with your investors. You know, people think it takes a very short amount of time to sell a business, or exit as it's called. It can take 10 years from where to go, from beginning to end, before that relationship, that VC ends. That's a long time.
That is.
you know, we're on that 7-year itch. And you've got to get on with these folks. You see them probably more than you see a partner, you know, if you're working hard, etc. So that relationship is incredibly important. So the team thing is not, team thing is about a few things. Team is about what is your skill match to that particular need. You know, can you do what is required? So just having a resume at the end of a document isn't actually the key thing. What you really want to have is that resume implies I can do X or Y. And the second part of it is, do I get on with these other folks, other side of the table? And that's more or less relevant at different stages of the business as well.
Right.
And that relationship is incredibly important. So team is definitely an earlier stage business in a location like here.
Right.
Number one. So, you know, you eyeball the person. Do you trust them? Do you want to work with them? Do you get on with them? It's not always, it's a personal chemistry thing. The next thing is important, obviously, is defensible products. So you don't necessarily have to be the only company in town doing what you're doing. People always ask about competition. And actually, I remember hearing at business school once from a major speaker that actually competition is a good thing. It makes you sharper. And it also proves there's a market there.
Yep.
Everybody says, oh, it's terrible, your competition. Actually, competition is not the worst thing. But defensible product means, okay, so if there is competition, how will you navigate through and differentiate your product or service to others? Scalable product or service is important. One of the things I was fascinated, I helped evaluate some entrepreneurs for Ignite, which is this accelerator here the other week. And what was fascinating, that great entrepreneurs coming through in Bermuda, great creativity, and like in many island economies, sort of a slight sense of people didn't realize what they're onto, didn't realize how big their businesses could be, not just locally, but also elsewhere. And that's part of the empowerment that BEDC can offer and Ignite can offer, etc. And it's quite important entrepreneurs think not unrealistically, but think about really what the capability is of what they could be doing in 10 years' time. Have a bigger vision.
Think bigger.
Correct. Think big is important because, again, if you want to get a venture capital private equity firm to invest in your business, you need to have a decent scale of business.
Right.
And even business angels in smaller locations like here, they still need to get a return. So if your business is worth 100,000, they might want to sell it for $1 million. Well, will your business be the kind of business that can be sold for that kind of million? Because if you don't think your business will be growable in a relatively strong way, it doesn't mean anything wrong with it, but it just means it's less likely to fit external investors of most sorts, unless somebody just wants to really help you out from a personal perspective.
And that's different though. That's just like a friends and family situation, or.
But even then, you know, you want to get a return for them. So there's still going to be, you know, people don't want to lose their money. In most cases. It's not donating. It's not giving. People often say giving. It's investing. And it's an interesting thing because often entrepreneurs at events I've been at in the past have said they want a venture capitalist to give them money. Why have you give them money? It's not a tax deductible donation. It's an investment. Again, because their investors need to return themselves.
That's right.
So,
and I think what you saying that helps people to understand, right? Because you think VC, I'm thinking of this person, right? And that there isn't anything behind them funding what it is that they're trying to do. But if you can understand that everybody is looking for their return, then maybe it'll help you see the connection.
Correct. So I suppose then the next thing we mentioned competition, but obviously what we call KYC, know your customer. Understanding returns. This is an important point. I was with this guy Don this morning, we discussed this. Most entrepreneurs have this relatively naive and understandable thought that what the venture capital private equity firm wants to do is get what's called like a 3 times return or 30% IRR internal rate of return. So they're looking at if your business is worth $1 now, they want to sell it at $3 value in a few years' time, or their stake become worth maybe 3 times more. That is a common misnomer, it's a common misunderstanding. Most VCs have that as their average return. Therefore, when you pitch the venture capital firm, you may need to show your return for them be 10 times, because 8 out of 10 businesses in the portfolio, the VC or most business angels, even more so like 9 out of 10 back, either will go bust, or if they don't go bust, they'll be nice lifestyle businesses, but they won't have the sellable aspects to them. So they'll never really cash out on that business. So they tend to have what they call 1 or 2 stars out of every 10 or 20 investments they make. And that doesn't mean the rest are good or bad. This means the financial return only tends to come. So one of our directors, Paul, he was the deputy CEO of Coots, actually, and CFO of Asia Pacific of Standard Chartered Bank. He was the CFO of a big private wealth business, like sort of a wealth management business that was sold. It was backed by a major private equity firm. He said when they sold that wealth management business, the whole fund, as it's called, of that private equity firm was returned by that one sale of their business So sometimes you have these stars that are incredible,
Yeah.
and the rest just mosey along. So you've got to understand with the VCs, they look at everybody to be a VC. In fact, what can happen is that, sorry, seeing the internet to be unstable, I hope it's okay. So in fact, what can happen is that you often find that the entrepreneur thinks that, and the VC, and it's quite hard for them, the way they manage themselves, to back more than one type of exact type business. They may invest in multiple SaaS businesses or multiple fisheries businesses or whatever it might be, but they wouldn't invest in two very similar kind of businesses. And often entrepreneurs think, oh, I read somewhere they invest in something like me, so I'll be backed by that VC. So there was kind of counterintuitive stuff going on. So, and that's kind of built again into where our algorithms work. And think about exits. People asked me the other week at the Ignite event, what is an exit?
Yeah.
An exit is a sale of your business. So at the end of the day, most venture capital or business angel or private equity or family office investors need to get a sale of your business at some point. They won't hold it forever. It's not like how some people hold property forever.
Right.
It's not like that. They, in most cases, with their investors, have agreed to get their returns back to them in between 5 and 10 years. And it's actually taken longer. People think it takes less time to build a business. It now takes longer than it used to take. But it generally takes 5 to 7 years at least to get an exit. So you've got to be in that business dedicated. It goes back to the team thing. They want to know you're going to be there for a long time. There's all kind of team dynamics that happen and stuff. People have children, people get divorced, people's lives change, the businesses change, and it's very hard to sort of navigate through that path. And the VCs are trying to see, or business angels, will that person be dedicated to that business? So people often say, I spoke to somebody yesterday actually in France who did our first research project for how we gather our data with Cambridge University. He remembers when I used to have a day job when I first started this business. And he said, well, nobody's going to back you then. And when you got like a proper backer, the first really major backer we had was a guy called Sir Harvey McGrath. We had some other backers beforehand who were very supportive of the business. But a funding round we started with a guy called Sir Harvey McGrath, who was chairman of Prudential and chairman chief executive of the Man Group. He said to me, basically, you need to be dedicated full-time to this business, then I'll back you. Because business angels like that often say, look, if I want to back you, I want you to be dedicated.
That's
to this.
right.
And that was fantastic for me for all kind of reasons, but made it possible. But he also eyeballed me and said, I can't have you having a day job and doing this. Where's your loyalty?
Right, exactly.
And sometimes we'll have to start up businesses part-time. There are all kind of things going on in their lives. So that can make it difficult to raise investment. So it can be chicken and egg. And so often it's good to say, if you back me, if I have enough funding, I will then focus on this. But I need to have, and people have to be realistic. Entrepreneurs have to get paid a salary.
That's
and
right.
stuff, but it doesn't have to be the same salary as elsewhere. That's they often people want to see a bit of a discount of that. So that's that. So I mentioned before about what's important, and we'll circulate these slides afterwards. But these criteria, or what's called key investment criteria, came out from a very recent project we did with Boston University from our research partner. So we get our data on the venture capital and private equity firms. Principally, we have a number of ways to do it, but principally from in-person interviews we do with venture capitalists around the world. And we do it with 30 business schools around the world, Cambridge University, IMD in Switzerland, Boston University in Boston, for instance, Georgetown in Washington. And we send MBA students to interview venture and private equity firms. They gather data that's proprietary, fascinating data about what we call soft as well as hard metrics, about the get to know, how do you feel, value add type stuff, which is not really captured by anybody else. And it goes into our database. And from that, they gave us a resume of certain factors that were important in the Boston market. And these are actually generally quite important
in general,
globally.
Okay.
They vary a bit by location. So there are 3 pie charts here. And the top right-hand corner, they interviewed some angels in the Boston area, business angels, who are early-stage investors investing to early-stage businesses. Smaller licks, small amounts of money, earlier businesses. And 62.5% said that the key factor for them backing a business was the team or the people. 62.5%. And the second factors were potential market and business model. but team was basically 2/3 their decision. So when you evaluate early stage entrepreneurs, you realize they might pivot, as people call it, or they might have to change their business model, because of course you have to be flexible as an entrepreneur along the way. And you often find a different model is relevant. You'll happen upon so many cases, but it's the people that they back primarily. When you look at venture capital firms, it goes down to about 30%. So it halves between the business angel decision and the venture capital firm decision. Because what becomes important then is a number of other factors more about financials, the business plan, the deck you have, the growth, what achievements you've had, what milestones. But that's understanding you've graduated. So your team becomes still very important. It's probably the most important factor, but it is not the only factor. And then you get to private equity, which is late stage transactions, very big deals being done, and only 5.6% decisioning comes from the team. So it shrinks from 60% early stage business, 62, to 5%, because people think the management is replaceable effectively if there's a problem. And what they're really looking at is existing cash flow, how they grow and turn around that business.
And I would think that well, I know you don't like to use the stage word, but at some point they're going to be way past the early stage. So these private equity firms are looking for more well-established businesses, right? Where they can clearly see how they're going to get a return on their investment. Correct.
So it's a different decision. It's a different kind of stage of business, therefore a different decision. So then deal flow and stages. Sorry, this little pop up here going coming from the Zoom call. So deal flow levels and stages is what this next slide is called. What's important to understand from the entrepreneur's perspective is you always think your business is the best in the world.
Of course.
Actually, some people lack confidence. One of the things I thought was quite, it was really, didn't really make sense for the quality of the entrepreneurs I saw the other week. Many of them lacked confidence. And one of the things that BEDC and Ignite, this kind of organization, do is inject confidence and structure to help entrepreneurs grow. That's what accelerators and those kind of programs tend to do. So they're ready to go on to venture capital firms, because it is quite a tough road in various ways. But you need to have some confidence that your business is the right one. But a lot of entrepreneurs get annoyed that VCs spin off and private equity firms and angels spin out a lot of opportunities. Now, sometimes VC firms get it wrong. It does happen that people get it wrong sometimes in terms of who they're going to back. It does happen. But what also happens is that often it's that criteria thing. The entrepreneur has, for no fault of their own, not understood the VC industry, because you can never fully understand it if you're not in it. And you need to understand as best as possible. But what we're doing is effectively automating some of that process so that you don't have to understand as well as you might do otherwise. But a critical factor is when you look at how many deals VCs look at. And in Boston, for instance, when the team from BU, this is very similar to other markets, and Boston's quite a close market to Bermuda. So a lot of Bermuda businesses looking to raise money in the US, because US dollars or Bermuda dollars are one the same here, which most people wouldn't realize. New York is only 70-80-minute flight from here. Boston's not much further usually. So when things go back to normal, the proximity to the US is pretty important. These kind of markets matter. They might be the springboard effectively for entrepreneurs raising money. But in the Boston market, Boston VCs were seeing anywhere between 100 to 1,500 deals. And they were investing between 2 and 24. So when you look at that, your percentage, you're trying to get a needle coming through the light. It's a tiny percentage gets funded. And so if you're going to get funded, and it's a difficult game, we've been through it ourselves, if it's a difficult game, if you think you're going to try and get funded, you may be unlucky and it may be nothing to do your fault, but by all means, focus your approach to what we call as warm matches, because you only have so much time and so many people to focus on. And focus on the most likely at that time who might invest in you, because even then, it's a tough story. But you can't talk to 1,500 people, you'll never get there. 2 or 3 years later, your business will have moved on and the world would have moved on. So understand it's highly competitive and it's quite tough. But a lot of these deals get spun out because there's something that doesn't meet the criteria in the first place. It's like bouncing off the Earth's atmosphere. You don't even get there if you're in the wrong space. But even if you're in the right space, there might be other aspects. So we're helping by juggling the various factors that are important, automatic algorithm, try to suggest who might be at that time the best talk to.
Well, that definitely helps.
Hopefully, as we're seeing matches occur. So the next couple of things we're going to talk about quickly are about the impact of COVID, because everybody wants to know about that. And there's sort of direct and indirect impacts at the moment. And this Boston experience is very relevant to everybody globally at the moment as well. We've got, say, people on tonight from India, from Asia, from UK, from US, as well as here. So it's kind of a very global audience. And maybe actually before we go to Q&A, you might want to say a bit more about Bermuda as a location and the Global Nomad program I came on to be here as well, which is a good thing maybe to mention before we go into Q&A and promote Bermuda as a base for businesses. But so what are we seeing? So there's a number of sort of key factoids there, as we call them in that particular slide. So with exits, there are different kind of exits that have emerged during this process. Everybody may have heard of the rise of SPACs, these special sort of vehicles being created, which are listing on NASDAQ, for instance, in the US, and acquiring a private business, merging them into their business instead of the old IPO process. So how people historically sell businesses that are venture or private equity or angel backed is either to other venture capital firms, as what's called secondary sales or next rounds, or to other trade investors. So you're running a soft drinks business, you sell to Coca-Cola. That's, as I called with somebody the other day, created like a smoothie brand in the UK that was sold to Coca-Cola. So they sold to a trade, as it's called, a trade acquirer. Or you can list your business at IPOs, they're called, in their initial public offerings. And those markets go up and down a bit. And a version of IPOs that's emerged recently is these SPACs, a very peculiar thing going on in the US at the moment. And they're very highly valued at the moment. It's one way of sort of backdoor listing effectively your business. There are backdoor listings in some countries they're called. There are ICOs, which are coin offerings using Bitcoin. There's all kind of ways of monetizing selling your business at the end of the day. And VCs are looking at it, but there's been some rise of different kinds of ways of doing it that have been out the back of COVID. And one of them is what's called SPACs, which is a new entity. And so there's also changes in the way the world's been. So online platforms, we're an online platform. We benefited, ironic enough, out of it may then revert at least partially back to normal again. So, but there have been therefore trends and traits that investors are looking at and exits are looking at in terms of what's going on, because there are different kind of markets out there. So and then we'll wait and see how that pans out, because obviously it relates in the day to how much you can sell your business for. You're in a whole chain, but it's rebounded in the US, but it hasn't rebounded so much in the UK. But in fintech businesses, for instance, financial technology, we're part of, it's rebounded big time. I call it European fintech, the banks, all those kind of things have become very big. How venture and private firms close deals and how they meet entrepreneurs has changed. So platforms like ours are being adopted.
I was going to say, you're winning, right?
Yeah, because you can then decide who's doing deals has changed, because if you're just meeting over Zoom, you may be able to actually take on an entrepreneur in a market that you wouldn't have invested in before, because you're getting access to new places. So again, it goes back to our model very much within Qodeo, being focused on not just the entrepreneurs in obvious places like London, New York, etc., Tel Aviv, doing an event virtually from Tel Aviv next week, introducing a venture capitalist at a conference there. But also, in places like Bermuda, Malta, southern US states. I was on call with some African-American entrepreneurs in LA, hosted by UCLA the other week. There were fascinating trends about how African-Americans are facing challenges and raising access to capital. So the whole, the democratization of capital in general is a wave that Qodeo is part of. And that's like the Robin Hood story in a funny kind of way. People are very critical of it, but actually that whole IPO thing with GameStop the other week, or the whole evaluation with GameStop, but that was actually, most people criticized that, were anti-democratization in terms of allowing people to come in and make their own mistakes. And very similarly, we allow people to get into a market they could never have got into before by having platforms. and that's a new economy thing. Just on quickly about what we call kinesics of startup team. What is happening is that, again, from this Boston report, was we found that venture firms, private equity firms, were saying they were really looking at how the entrepreneurs were conveying their passion and team dynamics in a slightly different kind of way than previously. And they were eyeballing people on Zoom quite a bit. Often people in different Zoom calls, and people undermined each other on calls and stuff like that, which kind of blows things up, etc. And the other really big problem was decreased attention span. So hopefully you haven't made everybody fall asleep this afternoon and this evening in Europe on this call today. But VC and P firms who have been evaluating more pitches more on when people get to pitch on the likes of Zoom, people's attention span on Zoom is shorter. You'll meet somebody maybe for 20, 30, 40 minutes. Often people do half an hour snippets on Zoom. I found that quite a bit, people doing it. They have these calendar invites for half an hour. And although they want people to pitch quickly, and you can often should be able to get your story across as to what you do, the problem that often is occurring that people say, okay, time over. Whereas if you're in a meeting, they're a little less brutal, and they can be brutal.
I was going to say, are they?
Well, I think they're less brutal as it's more face-to-face. It's harder to click off if you're actually in a meeting.
That's true. That's true.
In person. And there's a quote here from an incubator director in Boston saying, there's no substitute for looking an entrepreneur in the eye, making him or her or them sweat that little bit.
See?
Yeah, and I'm sweating a little bit today with the technical issues we've had today again. And the frequency of meetings with investors and entrepreneurs has changed a bit, and obviously there's less travel, but that may again revert. So that's kind of some of the research we found. This is a bit of a story about Qodeo, just quickly. So we were found really to solve all these kind of problems. You've seen we have about 170 VC&P firms on our platform globally. Many of those have been onboarded by this work we do with 30 business schools around the world. And what we do is we match investors with entrepreneurs of all stages and sectors globally automatically on our platform. So if you onboard into Qodeo in a few minutes, should take 5 to 10 minutes, hopefully in not too intimidating way, that we're always looking at ways to make it easier to actually onboard into our platform. You should or could, depending upon the nature of your business and the data you have in the system, start getting warm and hot matches or cool matches, or it might be happening immediately. And so we were found really to try and enable those kind of shortlists. And in some cases, entrepreneurs are finding a VC isn't for them. That's not the end of the world. It might be you need to do certain things. So we're looking to add more functions which will show the gap analysis, to add more capabilities to your team, maybe to become more investable, for instance. So that can be the case. You may need to actually be a year or two on, but it doesn't mean you're not going to be funded by VCs, just not now potentially. Maybe it's not in your market, maybe not VCs in your market, maybe you're ahead of your time, maybe your team needs to be changed. There are all kinds of things that can occur that make you fundable in the future, but not now. And so we think it's very important you go to a VC at the right time and don't burn your bridges at the wrong time. So sometimes we don't get matches, or they don't get all the matches they want, and that's not the end of the world. But it's good to be in the fray, good to be a member of the system so you can see what's going on, be familiar with what's happening, and be pinged by VCs if they do find you.
So do you give that information to the entrepreneur? So let's say they sign up to the platform and they're going through their profile, let's say completing the information. Will you, prior to them going through this matching process, say, you're not ready yet? And this is what you need to do to get ready? Well,
that's a good question. So you onboard initially without that. We are actually going to be adding some what we call gap analysis. And also, but we did launch a product which has been quite successful early part of this year called Concierge. So when you sign up to Qodeo, there's a free version which gives you basic functionality. There's what we call Pro, which is $9.95 a month. For that 50% discount with QOD50, that coupon mentioned. That gives you access to that community and access to the system and unlimited connections with warm and hot match VC and P firms. We also launched Concierge, which is double price, $19.95 a month. There's annual programs, etc. for that. And one of the things Concierge members get is one-to-one at the moment. We will be automating this also shortly, but this year, but one-to-one analysis of your profile that you've put up. So I or one of our team members, together potentially with Monica, our data manager, will review set up a time to review your profile in person over Zoom, and we'll go through it with you and we'll spot what we think you can do by maintaining an honest profile in the system. It's an accurate profile, but you might be underdoing certain things or
Right.
not understanding certain things, even though we've tried to make our process as simple as possible. And we found that there were entrepreneurs who didn't think they were going to exit, was going to sell their business. Well, that turned off VCs, bingo. There were people who didn't understand certain questions, not for any ill reasons. They just simply didn't understand certain kinds of industry questions.
Right.
So we helped them through that. So Concierge has been very, very handy to people to retilt, effectively reposition their fundraising pitch. So effectively, we do it on a relatively manual basis at the moment. It's a bit of free, well not free, but low cost consultancy at the moment. And we enjoy doing it, but we're going to be automating that process from some of the things we've seen from the ones we've been doing so far.
Yeah, okay.
So that's incredibly useful. So we can look at it and say, well, you should be doing the following things to make yourself more matchable or more fundable.
Yeah, I mean, I think it's necessary, especially for a Bermudian market where you have a lot of people who are looking and seeking capital and think they need an investor, but then going through something like this and learning what is required, what people are looking for, they may say, oh, well, I'm not ready yet.
So one of the things we do is when we added this again, I think a few months ago now, when you go through that fundraising journey, whether or not you see VC and PE firms who match your criteria, we've also added in some basic information about incubators, accelerators, etc. And we actually should add in BEDC and Ignite, the two entities here in Bermuda, particularly obviously BEDC,
Right.
into that, so for Bermuda, so that when entrepreneurs in Bermuda come through our system, who you may not even know, we might be able to kind of redirect in your direction.
Okay.
Because often they need those skills and help before they should even engage in this journey.
Exactly.
So there is we have got some embryonic kind of, some help there.
Okay.
But it's more basic at this stage, but we are enhancing that shortly. So, from our perspective, in 5 to 10 minutes for relatively low costs of many other apps, you're saving tens of thousands of dollars from our research we've seen by joining an app like ours, because we're actually on app, per se, a web application, so we're not on the App Store, but we're online. What happens basically is if you sign up to our system, we think from research done with a couple of major business schools, Cambridge and INSEAD, business school in France, we found that entrepreneurs could spend tens of thousands of dollars or euros and hundreds of hours stuffing around doing what our system does for $9.95. So there's a pretty significant sort of time and money saving we believe what we're doing. So you can have a look there on the slides we'll show you later, but you can go to Qodeo.com, like rodeo with a Q. We also have a blog and a demo, which are really handy things. So we've added the blog this year. There's all kind of useful tips. Some of the things we mentioned today are captured in the blog at the moment, and also the radio interview we did the other day is also now on the blog. But there are a lot of useful articles there now in the blog which explain things before you get on board, and there's some other education inside the system, like reports, for instance. We have our concierge members to show you about what's going on in various markets, etc. And so we encourage everybody to sign up. There's also that demo you saw before. But so if you go to Qodeo.com, there's reports, there's news, there's blogs, there's demos, etc. You can all find it, and it should be a relatively simple sign-up process to get in. So I'm just going to go down a couple more slides. Sorry, that's the blog, and it shows you what it looks like on the site. So you simply click up here, click blog or news, you might want to have a look at, and you can sign up over here in the corner. And it takes you through a journey. Then at the checkout, you put in that discount code, which is a Stripe-based checkout code. So I'm going to end by showing you a very short video. The time is running slightly over today, but we'll show you a short corporate video we have about Qodeo. And then what we'll do is we'll exit this presentation. Hopefully we'll be able to see folks again on Zoom. And we'll then try and take some Q&A at that point, and we'll have a look at the chat a bit. As an entrepreneur, venture capitalist, an advisor, and a banker, I was so frustrated to find that I couldn't raise funds easily, build pipelines. I thought there must be a better way. And drawing on experience at a business school here at Cambridge and other networks I'd built, I put together a team to solve those problems. And that's how Qodeo was born. Qodeo is the app where entrepreneurs, venture capitalists, and corporate advisors can find best fit funders, network, and build pipelines. In our research, we found that entrepreneurs spend thousands of pounds and hours trying to identify who might fund them. We found a way at Qodeo to get entrepreneurs to speak to the right venture capitalists, saving both money and time.
Qodeo is available as a desktop and mobile app designed to connect people across
iceberg. If you can imagine, all these entrepreneurs and venture capitalists are sailing along trying to make decisions based upon what they can see above the water, the 10% of what they see above the water. What Qodeo is doing is looking at the whole iceberg so the entrepreneurs and venture capitalists can navigate around. Qodeo uses in-person interview-based data. We send MBA students from leading business schools around the world to go and interview private and venture firms in their offices. We put that together with data from partners, from our users, and also from that public data that other sources sometimes use. The problem is that other sources are based on historic reported partial data, and Qodeo's system is far more dynamic to be able to get people better information and make better decisions faster.
Having a face-to-face interview is much more beneficial when gathering data because it helps us know what is going on the ground. Because our interviews are conversational instead of having a set pattern. So during conversations, we get to know a lot about the feel of the industry. And also there's a lot of feedback associated. Now, in my interviews, I'll be interviewing close to 30, 40 firms. So the venture capital leaders are themselves interested in what's going on in the industry. So it gives a broad overview.
I studied geography here at Cambridge undergraduate, and so did our leading cornerstone investors, Sir Harvey McGrath, and that was our common theme. We look at the private equity community as an ecosystem with interactions with entrepreneurs, venture capitalists, and corporate advisors, and only by understanding that community as a community can you serve them right. We built the beta and data with the backing of leading industry professionals. Qodeo is raising funds now to roll out our new freemium product, build our team, and grow the value of our business.
When I met Simon and I had the opportunity to see what Qodeo can do, I was very impressed with the idea of curating qualitative rich insights with quantitative data, with capturing various data sources and curating an experience that to allow entrepreneurs and investors to completely change the way that they get funding, and that they can run their businesses.
Qodeo is scaling up. What we've already built is a significant database. We populate that database through our in-person interviews and other activities, and we built our original team.
Our research has shown that there is a need and a gap that Qodeo fulfills, and we believe that in the next few years, Qodeo can become a well-established platform that help to create new efficiencies in the venture community by connecting investors and giving data to entrepreneurs in ways that haven't been seen before.
Qodeo's users get to market faster and better. Our entrepreneurs find funding, venture capitalists identify opportunities, and corporate advisors build pipelines. In 5 years' time, those folks will be more successful, and Qodeo will be the leading data platform for the venture capital community. Okay, so that's that presentation there. I think we're just about finished with, those are our contact details, and we'll obviously circulate to folks who sign up today how to sign up and get the benefits of the discount, etc. I'm going to end that presentation, open up the camera as such, and when I do that, I might pull the table we're using here slightly closer to us, so we can actually then to come online. And I think there's Monica I can see from our team who's been helping behind the scenes on organising them today. She's over in Europe. I see we still have quite a few folks here. Because of some of the issues we've had on Zoom today, it might be easier if Monica might perhaps voice some of the questions we've got coming through the chat. And if we get a chance, we obviously might like to try and get people to say their piece. But I thought what would be good is to get perhaps Jamillah here to say some words about Bermuda. I'm just going to try and also unmute there. There's a way I think to pin this, but I can't quite see it in this distance. So you can actually see, you're seeing Monica more than you're seeing more than seeing us at the moment on the screens. I'm just going to try and nothing about that, Monica. Monica's on our team, so happy to have you on board today. I just want to try and bring this forward slightly so we can try to manage this, because we had to change rooms today. So how we're doing it. So if I pin this, I think that should give you there.
There you go.
There we go. There we go. So this is Jamillah here from BEDC, and she's going to say a few words if we can before we go into Q&A about Bermuda, about a place for entrepreneurs, global nomad, etc.
Sure. So I'm surprised you changed your mind about this, because when we talked before, Simon said he was going to be very hush-hush about this digital nomad. He didn't want to tell people about Bermuda, right? No, but essentially what we're trying to do is encourage people who have had to work remotely anyway to consider Bermuda as a jurisdiction, to actually come here and work for a year. So we have a work permit called the Digital Nomad. You can apply for that. You can access it on our government website, which is gov.bm. And then the application process, all the details with what is required to be considered are there. But essentially, like Simon, you could be working in the beautiful Bermuda, doing your regular work, working remotely for at least a year. So
I came here partly because I knew Sean, who is the manager of Ignite, which accelerated here from a London venture capital connection. I was here effectively on more of a vacation officially. And then what happened was that he told me about this program. And because we do so much work in America, Bermuda has great access to America still, even in the COVID era. So I had a PCR test today to get into America tomorrow, but it does allow access into America from here, which is only a very short flight, and we're doing a lot of work in America. You can't currently fly as a European directly into America. So this has been this fantastic bridge between, we're a British company, but we're actually forming an American, as an American company at the moment as well. And that's enabled me to bridge those two. So for people who are doing business transatlantically, it's been a great base. There's a great investor community here, there's a great entrepreneur community here. And we found in Qodeo that a lot of island economies have been really interesting from an entrepreneurship and venture perspective. So we're active here, we're active in Malta, in Singapore, there's a whole bunch of islands. Sicily, we're quite active actually in Italy. So in island economies where you've got entrepreneurs who are potentially bound in some ways by historic by certain limits, and a platform like ours can give them access to
it. Definitely can. That's intriguing.
So you know, we'd encourage entrepreneurs and investors to come here, obviously, and as a bridge, but we're also trying to help the local entrepreneurs here with BEDC to gain access to these kind of networks and this kind of knowledge. It's knowledge. What you learn through this kind of system is knowledge as well as network. So when you engage with it, you know kind of how to do it. Now we have some slight difficulty trying to read some of these questions here.
Good on you.
I don't know if everybody here can. Some of them are to everyone. So you're going to sort of have to scoot in slightly, despite.
I should have brought my glasses, but then I'd be aging myself.
We'll just bring this computer in slightly after.
There we go.
The age of COVID is an adhocracy at the moment, to a certain extent. So, Monica,
what is a VC again?
So there's a question here. So Deanda Bannister asks to everybody. I don't know if we can see Deanda here at all. Okay, if I unpin myself.
I'm here loud and clear. Hi.
I want to see where you are here. So Deanna, try and see if we can find Deanna.
There she is. Her camera's not on.
Is your camera on?
Scroll across there. I saw her name. Yeah.
No, I'm not visibly attractive right now, so I won't put.
I suppose what we should do is, if we hear your name, if you can unmute yourself and ask the question. And then if you could please mute yourself afterwards and give somebody else an opportunity. And we in Bermuda, we'd like to go for a drink. It's a beautiful evening here this evening. And
it is.
We're not out, and the bars are open in Bermuda. So, we're not at the bar yet. So, you're holding us back from that. So it better be good. But anyway, so if we mention your name, and we'll try and go through it one after the other, please then ask your question if you're still online. And you can ask us to either of us and maybe point it who it's to. So, Deanna, if you'd like to ask your question first of all.
Well, yeah, I had asked what was VC, because I came in probably after you had introduced it, and some persons ably addressed it. A venture capitalist, is it? So that's a new terminology to me. And then my second question led to, it's sort of like a tongue-in-cheek thing. I would want to consider myself now a VC, because I have some monies that I do want to invest. And I was just, I sent a message to Monica to work out if I put in so X amount of dollars into your firm or a firm like yours, you know, like what would be the return, and just throwing things out there for that in that way. I would like to, I have money to invest, and I would like to
Well,
you know.
dangerous forum, admit that. Because
I
entrepreneurs in Bermuda,
You're
everybody's going to
get
come after
flooded
you.
with
Lots of people have taken the Swizzle in over the next week and bring some documents with them. For those who haven't been to Bermuda, the Swizzlins are famous inn near the airport, where they serve some rum swizzles, they call them. Once you're in there, you don't escape. So entrepreneurs will be in there, bringing you in there, and the rest is history. Okay, so just to explain a couple of things, quite different aspects there. So first of all, Qodeo is not a fund management platform. We're not a crowdfunder. We don't manage money. We're like a dating app. So what we say is often, you know, dating may be for money, but that's not really the idea. So we are introducing parties, we're introducing investors and entrepreneurs on a caveat emptor kind of basis. We're not a regulated fund manager. So we say, based upon the information you've given us, based upon the information those folks on the other side have given us, that we think these are the appropriate matches, you go off and do the deal. Yourself, and hopefully we'll be able to track that and see that successful. And some of the platform, when you have matches occur to the platform, we don't yet have full functionality, but there's less functionality because the functionality we currently have for entrepreneurs, for investors, is mainly focused around the needs of these professional VC and private equity investors. But we are adding in functionality for angels and what's called family offices, who are wealthy individuals who manage their own money. Later on this year, hopefully. And there are various angel platforms around as well who we sometimes cooperate with, crowdfund, etc. And I know Ignite here, for instance, coordinating a number of angels on the island of Bermuda together to help some of their folks who sometimes overlap with BEDC. What is venture capital? So basically there's a continuum. I used to teach business years ago, and it's a whole lecture and a half, but basically there are different basically there are different kinds of funding in the government funded as well, and governments can often provide a loan. It's basically loans. Debt is loans of various sorts, and they often have interest attached to them, and sometimes they have security or not. So security means with the loan basically that you have to personally or by business guarantee the value of what you've borrowed. Some loans are low doc from governments, as they're called, where there isn't a guarantee, you just have to pay back the money, but all they're seeking is the money back over certain terms. And Bermuda government runs a program, like British government runs programs like that, and different forms of debt exist. Then there's what's called equity, and you know, when people raise money to grow a business, they can generate money from sales and profit, which can grow your business, and you can generate money from debt into your working capital, and you can generate money from different forms of private capital. And private capital are principally business angels, family offices, venture capital, private equity. There's a few other things around there. Basically, business angels are individual people who put in their own money at their own risk. It depends what kind of terms they do, to take a stake in your business. So all equity is where people take a share of your business. So debt, there are certain forms of debt that look a little bit like equity, things like convertible notes, where debt can convert into equity. But equity is basically where somebody takes a stake in your business. There's all kind of different ways that can be done. The lawyers are better explain the details of that. But in other words, if you get a venture capital business angel investor into your business, you may sell them 20% of your business. They then have 20% of your business going forward. So that's why you have to get on with them, because they may put in various controls and other kind of things like that as well. So a business angel or private or venture investor will take a stake in your business. They'll own part of your business in return for that money, for which they'll also have certain controls. And the way they make their money, they can make some money in funny other ways, but the principal way they make their money is then to sell your business. So business angels are individual people. They may have made some money. They may be partners in accounting or law firms who put in many cases, $5, $10, $20, $50, $100,000 into a business. You have a few folks in Silicon Valley they know as super angels, who are multi-billionaire type people, who cut $1 million checks when they like something, and that's what's called like a super angel. And you have angel groups.
Where are they?
Where are they, Simon?
They're buying us drinks tonight. But no, there are some of those folks in Silicon Valley. There are some people like that. There's a few folks like that around the place. But there are also angel groups. So you get groups of angels working together sometimes in certain ways. And there are pluses and minuses to that, because there tends to be a bit of a herd type mentality there. So everybody kind of follows. Yeah, so one person does it, they all follow sometimes, as opposed to making individual enough decisions. Then you get venture capital firms. They'll be investing usually anything from several $100,000 from what's called seed or very early stage funding, through to sometimes billions. And it varies according to location, that fund, your size of your business, how much they raise. In the UK, the smallest VC firms tend to be about £35 million in total that they manage, which means they may make lots of little $1 million or $500,000 checks. And then there's multi-billion-dollar investors. One of the people on this event I'm doing Tel Aviv next week was the co-founder of Apex, which is one of the biggest venture capital firms in the world. I introduced him at an event in Tel Aviv, in a real-time event 2 years ago on a rooftop at an event, and he set up this firm that's multi-billion. And sometimes when they write checks, they can write small checks, but they also write multi-$100-million checks to certain businesses. And you'll have seen the other week Robin Hood. Some of the backers of Robin Hood, big private equity firms or venture firms in Silicon Valley, wrote multi-billion checks over one weekend to keep Robin Hood afloat. So, there's different scales. So just because somebody's a venture capital firm, they may have millions or billions under management, as it's called. It varies. And private equity tends to be usually deals of $5, $10, $20 million pounds upwards, which can be multi-billions. So groups like Carlyle manage hundreds of billions. Whereas there are groups who invest in mid-market businesses who might want to invest in a fisheries business or a canning business or a drinks business, who might want to grow it to a certain stage and then sell out. So you get different kind of size and stages, but basically the difference principally is size and stage, but also that you get professional managers in firms. So a venture capital firm have effectively employees, don't call that, but whereas the business angel will be one person or one family will make a decision. I think we've probably covered quite a bit of that in quite a lot of detail. Hopefully people haven't sort of fallen asleep during that one. And then we've got a question here, I think, from, is it SG Turner? Maybe if you're there, maybe if Deanda can please mute, and SG Turner is still there to ask a question. Is SG Turner still there?
Good afternoon, everybody.
Hi. So if you maybe explain where you are as well. Sorry, I forgot to ask that before.
I am here in Bermuda.
Right.
I actually work for the prisons, but I just wanted, I think you did answer my question a little bit in what you just spoke about. My question basically for everybody was, do VCs, angel investors, have a preference to interact with sole proprietors versus LLCs versus partnerships? But from what you were just
thank you. So that's a slightly different question. So most professional investors and even most angels will prefer to invest in incorporated businesses.
And why is that?
Why is because it's a kind of controllable legal entity, which then is easier to identify for sale, to sell shares and etc.
Right.
If you have a sole proprietor, that's you individually. So that mixes with your family interests, your personal interests. I mean, as it is, entrepreneurs mix their personal interests with business in many cases anyway, because they're so close identified.
Right.
But it is best to have a separation. It's also safer from the perspective of an entrepreneur to incorporate, because if it all goes wrong, in most cases, as long as you've got the right insurances, wherever it is, the company carries the can.
Right.
Unless you've got guarantees to various debt sometimes. If it's sole proprietorship, you personally are liable, and I wouldn't want to be in that position, because investors have to come on the basis of what we call caveat emptor, and that's basically buyer beware. It's kind of you go in open-eyed, and a lot of these things go wrong, all kind of reasons, and you just try and find the best opportunities you can. There's a portfolio kind of approach, as it's called. Most investors in the space take. They invest in multiple businesses, understanding some succeed, some don't, some need more love, wherever it might be. And so you need to be incorporated that perspective. Partnerships are also dangerous because of that, although they're now limited partnerships. Yeah. So incorporation is the key if you want to enter this world. Having said that, we're a B2B platform. So when you sign up individually as an entrepreneur into our business, but you identify the name of your organization. So even if you want, we don't always check that you have that organization incorporated yet.
I was going to ask you, would it preclude people from listing and signing up if they don't have that incorporation in place?
No, it wouldn't at this stage, though we may look at doing some things to do with that later. But what is helpful is to have some kind of name, at least, for the entity.
Yes, I mean, yes.
And if you're going to interact with these VCs, if you're not going to be incorporated, you're going to find it hard to do a deal.
I mean, that's a good point, and it's a good question. Thanks for that. Because a lot of the businesses, at least our stakeholders, are sole proprietors, right? So there is not a formal entity as such. And that goes back to what you were saying earlier about being ready for investment. So these are the things that you have to do to ready yourself. So if you feel like you're in a position where you want to see capital from an investor or an angel, VC, or whatever, then step one would definitely be to formalize the business structure and make it a limited liability company or LLC.
Yeah, I mean, different countries have different things they call things. Britain has limited companies, Australia's PTY limited.
Yeah.
The other thing I'm not a lawyer, but when forming a company, definitely what's important to do is understand how it's done properly. So use a lawyer to do it if possible. You can buy them, companies off the shelf, as it's called, in various ways, now in automatic ways online. You just need to make sure you set up correctly, because if you set up a company and then you get something to invest in it in the wrong kind of structure, then it's a nightmare to unwind yourself out of. I was on a call with our lawyers the other week. They do these, we remember a program called Equip, which CMS, Cameron McKenna, a big UK law firm, we use our lawyers, give us discounted law fees. And they do these monthly talks with entrepreneurs and with investors. And there was a talk I was on the other week. I was from here, but we're a UK company, so I was on that call. And one entrepreneur said that they had basically got off on the wrong foot with some investors, and now I find it almost impossible to unwind that deal. So you can be very careful how much you give away, what those terms are. If you give them if you give a first investor preferential terms over somebody else, it puts others off.
Right.
There's a whole game and a half. So you have to be kind of open. I think BEDC presumably and others can advise really about how to even do that before you interact in that sense. But if you go on to Qodeo, you have to really have some kind of name of your venture idea you've got.
Right.
But you really ought to be thinking about incorporating at the time you interact with those folks. So thank you. If we actually can mute again, we've got Michelle White, if she's still on at all. You want to ask your question? Michelle?
Yes, I'm here. I'm here. I'm here. I have 4, but I'll do the most important one. I'll work my way down and give somebody else a chance. My first one is, are matches just financial? Finding the right CRM and other systems I described it as diving into a haystack, and could be overwhelming. I want this and I want that. Is it possible to have a match with an investor that is more on the technical side as opposed to just the financial side?
That's a great question. Thank you. If you can mute yourself, can I answer that? So great question. So when you're on board on Qodeo, which I hope you all will do after this, it only takes about 5-10 minutes. And don't forget the discount coupon, QOD50, to get 50% off. I have to do my bit, I have to pay for the bills. And we are looking at doing arranging with some organizations on the island to perhaps, acquire some tokens so that they can give some of their members, tokens so they can go straight in for free if they're a member of that organization into Qodeo. But so the question here is, what about the skill match? So we ask you as you're on board at one point, oh my God, turn off number 1. So, and I can't tell you how that wasn't true for that person, as nobody on the call today. So it's kind of, you may actually have got wrong sometimes what you think you are offering in the first place, and it might be you need to add more. So your team might need to be bigger, you might need to add more skills. So we do ask you that. Eyeball the VCs, and we really ask them some questions. Is actually what they do, because sometimes they misunderstand And you need to have one of the most important factors with earlier stage businesses we found, and it is scored on our system, and it does make a difference in how algorithms work, is the stage of your business is incredibly critical in terms of the love you get from the VC, so, or the investor. So early stage entrepreneurs typically need a lot of love and a lot of patience and a lot of kick up backside sometimes, but a lot of love, tough love as they call it. But they need to get on. They need to be able to kind of empathize to a certain extent, as well as be driven by milestones. The later stage of the business, the more it becomes a financial, clinical kind of discussion.
Right.
And those private equity firms that my colleague Paul worked with were hard as nails. They were tough as to him, and he was an FD. So they were incredibly demanding, but they were literally looking for a return that was kind of what they were doing. And so it wasn't wrong, it was what they were doing. So an early stage entrepreneurs are going to probably burst into tears if you drove them like that. So you need to make sure it's not just a skill match, it's also a relation match. We're not perfect now, but we are trying to look at the attributes required. So if we see you're from a remote community, a diverse community, you haven't raised capital before, we ask you questions that try to match up against the right partners. And again, it's like that dating analogy yet again. It's like, do you have certain proclivities that you like? It's very similar in this circumstance. Are there certain things you like or need help with that can be offered? And it's a very similar kind of analogy. So thank you, Michelle. Perhaps we can try and give somebody else a chance here. So we've got, maybe mute yourself, we'll try and do what we can here. So we've got here a question from Kelsey, who I think is one of your colleagues here. Kelsey, you there to ask a question at all?
And is Monica?
So Kelsey, you there at all? Don't know whether she's still there. Can't hear her. So Kelsey asked about.
She's there, but.
Yeah, well, she may have asked the question, may have gone, but she asked about whether we have video game development as one of our categories. Is there a way to tell investors you're familiar with the video game industry? That's an interesting one. We're often adding and changing categories. Maybe Monica can note that down actually, because Monica handles a lot of our data and social media management stuff. We've actually been looking at continuously updating our categories. So when you sign up for the platform, it asks you what kind of industry are you in, and it maps you against effectively others in your industry. And there are continuously new industries bubbling up or new opportunities bubbling up. So that's probably a category, if we don't have them, we should probably add. You would probably be covered in tech generally.
Okay,
because tech is a sector.
Just select tech for now until such time as.
But there'll be like a subsector of tech. Video games. So you've got tech, you've got industrials, you've got all kinds of different major sectors, and under those sectors we have what we call subsectors, and video game development be a subsector. But it's a good idea if we don't have that to add that. Perhaps we got so Monica's just said the video is available on our website, will become available. Some video here she's talking about here, maybe today. Today's video will be put onto YouTube, will be made live later onto our blog. I just wonder whether Tom is there. Tom is a European consultant working with helping with government grants, those kind of things in Europe. He's in Nottingham in the UK. We know Tom. Is Tom still there on the line at all?
Hi, Simon. Hi, everyone.
Hi, Tom.
Great presentation. Thank you. My question was, so for companies, say, for example, in the Midlands or north of England, who say are away from London and the capital, should they find a warm match or quite a close match, how soon could they expect to kind of arrange that first contact, maybe face to face with a potential VC or private equity investor?
That's a great question. So as far as we're concerned, thanks, Tom, you may want to mute yourself. So we've seen a lot of the demand for this service coming from what we call regional and diverse communities. So I was on the phone yesterday on Zoom with entrepreneurs in Manchester in the north of England, who female entrepreneur runs a female entrepreneur group in the north of England, about trying to help access capital for relatively underserved communities up there. And what we found is that a lot of those kind of communities can now use Qodeo to access that capital opportunity. So once they've identified who the actual potential investors are, who they would never have kind of known how to start with initially, a Google search certainly won't do, you'll be bamboozled by that. Then if you have a warm or a hot match on the system, you can request contact with those warm or hot matches. They then have to accept that. And of course, not everybody accepts. It's like on many things on social media. If you ask somebody to be your friend you or like you or follow you, it's not quite swipe right, swipe left. It's not that simple. But there is it may be they're busy at the time. Maybe they're not looking at new deals at the moment. There's all kind of reasons why they may not get back to you immediately. But you can request that contact with them, and then they can get back to you and accept that. If they accept that, then you exchange each other's details on our system, and then you have to go offline to go further than that.
Right.
We are introducing later on this year more sort of messaging capability in the system, so you can keep more of that chat inside the systems. One of the things people have asked us to do, which and we'll do more sort of in-app type messaging, because a lot of the messaging we do at the moment comes through emails to notify you of certain. So you'll get notified. So if a match occurs or you have matches, we'll notify you by email as to who's like to be your match. We don't recommend you contact cool matches, but obviously you as an entrepreneur, as a pro or concierge entrepreneur, can see online who those matches are, and there's nothing stopping you, once you've seen who those firms are, to make contact. But we'd strongly suggest going for the warm and hot matches, because the whole philosophy of the business is focus your time. What can happen is that VCs may contact you. So VCs may see opportunities, and particularly in regions. So we're seeing that VCs are looking for businesses that are a little bit different, that aren't just in the obvious places where, but if you look in New York or London, valuations of businesses tend to be very high, the values of those businesses. Similar businesses may be much lower value, much lower cost for them to buy into effectively in regions, and they can grow them in different kind of ways or access new kind of markets. So you will find regions, people will be picked up by VCs, and when a VC spots you, they can make contact with anybody in the system.
Okay.
So that's
through the system.
Through the system to make initial contact. They can, of course,
go
offline. They'll see who you are and go offline. But we're trying to keep more within the system if we can at all.
Yeah.
Thank you, Tom. So Tom wants to mute them. If you want to, if anybody comes in, if you're able to maybe show yourself on the system at that time, that would be great, because then we can actually see who you are. Now there's a couple of people who said they subscribe, which is great, and we'll obviously be in touch with you folks as. Ronald is a subscriber. Ronald was on a call the other day in Britain, major entrepreneur. And when Robinson, I see a subscriber, it's great to see.
Davida.
So we've got Davida Roberts here. Is Davida there at all? And Davida can tell us where you are, and maybe do you have the camera?
I'm here. Yep. No, sorry, I'm at my son's football practice, so just not the great background. So I just have two questions, and I'll just ask them real quickly. So the first one was, what type of vetting do you do for your VCs? And then just how secure is your platform as far as, I guess, entrepreneurs sharing their ideas to people who actually have funds that possibly can run off of your ideas? So just trying to figure out how secure that is when it comes to that.
There's a brilliant question. I should put you on commission, like
I'm on commission.
And these questions are like, this talks to our proposition. Okay, so one of the things we're concerned about, and one of the things we have to tackle with business angels before we allow them in fully into the platform, is checking who they are. And I was talking to this guy Don this morning. That's a very good point. Right. So the issue we've got with business angels is there are probably, we think, 700,000 business angels globally interacting with early stage businesses from research we've done, whereas there are 21,000 VC and PE firms. So there's huge numbers of business angels coming to the market all the time. And the entrepreneur market, according to Inc. magazine, is growing at the rate of 6.4% per year. So the total volume of this whole industry is growing all the time.
Yeah.
People are coming on all the time. So what we would say is that, so to allow angels on, we need to do 2 checks for them fully to allow full functionality. One of which is to check they know the risks, because they need to, as an individual, they are more at risk than firms are. They're potentially more at risk than who you might be as an entrepreneur. Their funds risk. We need to make sure we cover that off, and there are some things we have to do there. The second thing we also have to do with them is check their bona fides, because of course you could have people coming claiming they're what they're not. And that can have the entrepreneur side, but a bit like on LinkedIn, that kind of gets noised out, and we can suspend users of any sort if they're the subscribers of any sort, they're misbehaving in the system. We haven't had that to date. With venture capital and private equity firms, which is the question you also asked, what we do there is we've interviewed in person the majority of firms on our platform. We've done that with 30 business schools. We've done it in India, we've done it in Singapore, we've done it in Japan, in Malta, all over the US, recently in Washington, DC area, in Boston, we do other parts of the US, Philly, and London, and Malta, all over Italy, etc., Israel. And what we do is these business school students interview the VC and P firms, and they eyeball them. And there are a number of things they seek within that, and then they hand over the keys, effectively, the ownership of that account to that particular VC firm to take over the account. So we've done a series of kind of eyeballing checks, effectively, which are quite important. The second thing is that we do have, said, 3 to 5 VC and PE type firms coming to the system every week. I spoke to another one yesterday who found us in the UK. It's a new firm being established, or it's actually an offshoot of a corporate venture, effectively. And with those firms, what we do is do a 5 or 6 step verification process. So if you come to our system as a VC firm, we do some checks, and won't tell you what those are. But Monica, who's on the call there, checks the VCs. We have a scoring system, and if we don't think either you're bona fide, or more important, if we don't think you really are a VC, not because you're trying to wise ass the system or something, but because we just think that it's not really for you and you've maybe misunderstood it, and maybe you should go down a different channel, then we will let you know that, and we will question people, not to be difficult, but just to make sure they are right, not just bona fide, but right. In terms of VCs nicking ideas, there's all kind of views about this. VC and P firms tend to be pretty ethical. Put in as much or as little information as you want into Qodeo. We'd have to say the more information you put in, the better match. Exactly. Yeah. So what you do is you onboard initially, and you get some initial matching potentially. You then go into your detailed profile. We always encourage people, including this concierge process we have, to complete as much of the profile as possible. And the more that's in there, there is a standardized kind of system. So people look across ability settings. So when you sign up the platform, you're able on the top right hand corner on the control bar, you can pull down a menu and your profile, like with profiles of lots of accounts you have online, and you determine what's called your visibility. And in that, our default settings are to allow most of your entrepreneur information to be visible to VCs. If you want to be invisible to VCs or partially visible to VCs, or if you don't want to be visible to other entrepreneurs in the system, because it's a nice thing to do to look at other stuff once you've worked out who you're going to talk to, you can look up other entrepreneurs in the system, potentially others with byproduct of this. And you may not want other entrepreneurs to see what you're doing, or you may want other entrepreneurs who could maybe
team members,
exactly, you could get together with.
Partnering.
But anyway, you can determine yourself after the initial defaults, which allows some degree of visibility, who sees what of your data in our system. And that's incredibly important. A major VC in the UK, one of the top successful VCs in the UK, when he onboarded on our system directly, he said to me it was incredibly useful to know how we handled their information and that people could, on their side, decide whether they see it or not. The only problem is if you decide to go in stealth mode, others won't see you potentially. But you might say, I want to be in stealth mode for building my proposition, and I want to be what we actually got another, hopefully not a dating analogy here, but what somebody once called in our system, voyeurs. And voyeurs in our system are people who just want to see what's going on. They just want to be in the know. They may not be raising money at the moment. They may be raising money in a year's time. They want to get to some knowledge. We have reports and system. We have blogs. We have webinars, all kind of activity going on, which helps them be ready for when they're ready. But they may not be ready now. Right. And we were talking about before. And therefore, that's important. The only other thing I'd also say is that I used to teach business years ago. There's a Harvard business case where a famous venture capitalist in Silicon Valley said, ideas are a dime a dozen, execution is key. Yes. And so it sounds a bit patronizing because people do have unique ideas. But again, that goes back to the competition discussion we had before. But at the end of the day, it's about execution. And unfortunately, however brilliant you might think your idea is, somebody else might have had a similar one. It may not be executed the same way. And then you have to tell the market why it's different. But VCs don't tend to be out there poaching things. But, you know, if somebody does that, we'd certainly like to know, and we could suspend their membership if they act, because we have terms and conditions when you sign up. So if you misbehave, we can suspend membership.
I would imagine that their skill or their superpower is identifying the entrepreneurs or the businesses that are going to work the hardest and do the work. They just want their return on the investment that they're giving the entrepreneur. So that goes back to what you were saying earlier with the team and who's part of that team to actually make the idea work. I don't think they may not be interested at all in doing the work, right? It's like you do the work and then I'll get a return on
there is sometimes, occasionally we might say, well, maybe a VC is coming on who has a competitor business in their portfolio and they're trying to find out about my business.
You think?
Yeah, but there are, but it hasn't really happened what we've seen in our system so far. But we also have terms and conditions, and most of the organizations who are VC and PE firms, unlike angels potentially. In angels, there might be more question marks. It's harder to verify what they're going to do because they're individuals. But most VCs are members of trade associations. In the UK, there's something called UK Business Angel Association, and most countries have angel associations now. And one of the terms there is ethics.
Right.
And if you go around misbehaving, you're not going to get many entrepreneurs want to work with you if you messed other entrepreneurs around.
Right.
So it's unlikely. Now, I just see with time is getting a little bit limited. Poor old Jamillah probably has to get home. And in Europe, it's getting very late. I suppose in Auckland, we've got somebody. It's now nice bright morning. The viewer we have in Auckland's wearing his or her breakfast at the moment. But and in America, it's getting to tea time. But we have probably maybe 5 more minutes because we can't maybe take all the questions.
Yeah, sure. And what if, I don't know how this system captures the questions, but what if you go through and answer the questions? Sure. And we can email your answers to those who. Yeah,
so if Monica can maybe take notes, please, of the questions, and we will try to get back individually with answers by email where possible.
Yeah.
And of course, you can follow Qodeo. You can follow Qodeo on LinkedIn. We have a company page. I'm on my LinkedIn is Simon Glass 5 is my LinkedIn profile, but Qodeo has its own page on LinkedIn. We're on Twitter, we're on Facebook, and obviously we've got our own page. So you can find lots of information out. A lot of the information about the industry and about how to interact with the industry is in our blog. There's a lot of information there now. We've been working quite hard on that to give people a lot of insights. But perhaps we've got maybe take 1 or 2 more questions, and then as I say maybe take the others by 4 or 5 other questions, and you might want to go to sleep this evening. We'll go for a drink. But we'll try and take Dean as the next cab off the rank. Is Dean still there?
Still here. Good afternoon.
Well done for hanging in there.
Hey, Jamillah, how are you? Simon, I appreciate your time. My question was, you had on one of your slides in the earlier part of the presentation was defensible product. Yeah. How do you quantify defensible product? Are you speaking of being able to show your investors that this is a good product, and how you correlate that? Or are you trying to show what it would look like down the line?
Okay, great. Another great question. So I must say that I'm not just saying we've got questions coming from around the world here, but that the Bermuda entrepreneurs, you're from Bermuda presumably.
Yes,
so Bermuda entrepreneurs are quite a lot more savvy than you realise. You know,
oh well,
there's a lot of opportunity outside Bermuda.
I know that they're
benefiting from.
Yeah.
You know. Okay, so defensible. So defensible, it means a number of things. It's a bit of a technical term. Unfortunately, what happens, you hit jargon in this industry, and that's one of the difficulties, people coming in from outside. Defensible generally means that there's some kind of intellectual property about the business. That can be formal intellectual property in business like biotech, pharmaceuticals, designs. There are design rights, there are copyrights, there are the software, there are patents, etc. Defensibility is also what's called know-how and show-how. So know-how and show-how is basically, for instance, we work with 30 business schools around the world for our research. We've codified effectively processes to how we do that. We know what we do, and that's know-how and show of the business. It's a system, it's a mechanism which is hard to replicate in a way. And when we talk to big data providers that we either compete with sometimes, or they don't really do what we do, but they do data sometimes, or we talk to others, they're kind of intrigued by the system. They think, how on earth would you do it? Because our cost of interviewing VCs is negligible compared to big organizations, because we work with low cost, is a low cost model, works in all kind of ways, and it's impossible for some big company to go out and turn the ship in terms of how they do this stuff. So that's a bit of defensibility. So defensible is how you do your business and is how you're going to react to your competition. And that's obviously related to the intellectual property side of things, which is the legal side of protections, which is a more firmer kind of way. But even if you have intellectual property protections, that can often be breached by, often there are horrible stories of people having a patent filed. And that's actually the most dangerous thing to do sometimes, because when you file for patent, some of your discovery becomes open. All kind of people look that up, and it can be poached at that time. It's nothing to do with us, but that's a kind of so it can become quite dangerous sometimes. So I can see by the way Monica has kindly also put in the Qodeo LinkedIn page, Qodeo Twitter page, and the Qodeo Facebook page. We had something like 8 million impressions on Facebook in the last 3 months, but not everybody always follows us. So we'd love to have more people follow and get to see news and events and what we're up to, as well as obviously come to our own pages. So thanks for that, Monica. We had thanks, Dina. Perhaps you want to mute there. 1, 2 more. So we've got talent. Have you got a question at all? If you want to unmute.
You still here, talent?
Still there? Gone to the pub, I reckon. Got a better offer. Okay, we understand. We will send out copies of the recording, hopefully, and the slides and the discount coupon to everybody afterwards as well. Chris, is Chris still there? We've slightly overrun here, but it's a good conversation. You still there, Chris?
If you're after Chris Barrett, yes, I'm here, Simon. Great to.
We have had several Chris's online.
Oh,
so let me see if we can see you. No imposters. Nobody can second you. Don't worry, Chris. You're one of a kind. He's actually one of our shareholders. He's actually a very well-known angel investor in the UK.
Okay.
And I just wanted to say very quickly that I think Qodeo is also a great partner for angel investors, because the big challenge for angels is that we'll take a company through those early stages, but we run out of big ticket money, and then we need to get venture capital involved. And Qodeo is just the best tool for finding that next stage of funding. And if you're growing a business, that's what you need. You need to keep growing, and you need to find new partners, new investors. So that's why I love what Simon's been doing here. So it's been a great evening for me listening in on a Friday night, and I hope it's been a great evening for everybody else. But I think there's another Chris you really wanted to talk to. So sorry, Simon.
And you and I have to go for a drink in the pubs after April the 12th when they're allowed. I'll be back in town for then. So pubs in Camden Town open on the 12th of April. Unless Boris changes the date.
Okay, but meanwhile, Bermuda sounds great. So yeah,
we're going to US on Sunday, so it's been a great base for the US for us as a business. Obviously we're doing the US. We'll be in touch. But thank you, Chris. Yes, it's a very interesting comment, because with the access to and for angels, not only can angels find opportunities to invest in businesses through Qodeo, and it's one of the things we're looking at developing more, but we're also looking to develop angels the ability to then find venture backers for their next round of funding. Because once you graduate from angels, in many cases, you go on to venture. It's a great point that Chris made. So, and Chris has how many companies in your portfolio? You've backed a bunch of angel businesses.
Over 100, but today, that pick and mix strategy won out. So a small investment topped up with a slightly bigger investment, topped up with a massive, topped up with a convertible loan, topped up with a massive potential return. So, I'm very committed to what founders are out there trying to do. It can be transformative for you guys, and I have a diverse approach. So I'm always looking out for different things to add into my portfolio. So Qodeo is potentially for me a great way to access those new deals as well. But to me at the moment, the most important thing is being able to move up that next step in the funding ladder, and Qodeo is a tool that can do that for you.
That's great, you say, and Chris has got a huge amount of experience as an angel investor. In fact, perhaps maybe Chris can talk about you giving a bit of advice on that side of things, even helping with the blog at some point. Chris had a background working in IT and worked for the
I think we might have lost Simon.
In regards the family. So I'm just going to then take the next question. If you want to unmute your, if you want to, sorry, mute yourself there. Let me see, we've got one or two more questions possibly here. Let me see. So we've got, so that Chris, we've got Tom, we've had, I think, there's another Tom, another Chris, then another Chris. There was another Chris online. I know another Chris signed up.
It might be me, I don't know. Chris Bully.
Yes, it's you.
Okay. I just wondered if you have any sort of inspirational stories of success stories of people who have actually managed to get funding through using your platform. And I mean, just listening to Mr. Barrett there, it sounds like do you have some? Because
that's a great question. Thank you. So before we go to the next one, so okay, so we've had hundreds of matches now occur on the system since we released the matching platform. So our previous platform was a global database of venture capital and private equity. And one of the things entrepreneurs said to us is we can't, is, you know, and we knew we couldn't really track what happened to them afterwards. They would try to find who to speak to and then trot it off afterwards. So what we're going to do now is track some of the success stories, and we'll kind of obviously begin to relate some of those things. But what we have in Qodeo is sort of several stages effectively of the process. So the first stage of the process is obviously coming on board with us and identifying who those matches might be. So we think we probably save people months of time and thousands of dollars in actually identifying who to speak to. But the next part of the process, which isn't under our control, is whether you actually do the deal. Yeah. So as I mentioned, that you can meet potentially 30, 40 VC or P firms or angels, or it might be through Qodeo, who are your warm or hot matches. You may do deals with one or two of those. That can still take 6 to 12 months. So having released the matching platform off the back of the original database, we're expecting to start to see more and more of these success stories of connections rather than just matches and deals done. And we will be informing people about some of those success stories. So obviously that's useful to us. But I think we last looked a few weeks ago, there'd been something like 555 matches between VC and P firms and entrepreneurs on the system to date. Can we, and this is all over the world, of all kind of stages. So Norman has made a comment. Thank you, Norman. I will put you on commission as well. Lots of people want to be on commission. I think that's probably, as Mike P is the last one perhaps, and then we'll probably have to wrap, as we're 6 p.m. in Bermuda, 5 p.m. in New York, and in the UK, that is, we are now 10 p.m. So Monica is running late in Europe. So is Mike P still on the call before we go? It looks like he is.
Yes, good evening.
Or Mike, or?
Hi, can you hear me?
Do you have video, Mike?
Yes.
You want to come to video just so that everybody around the world can see you.
Okay.
Like, that's why I'm not on video.
Exactly. Here we go. How's everyone doing?
Oh, sorry, it's the wrong person. I've got there. Whoops, sorry there too. I pinned the wrong person.
No problem. This is the original Mike P. Don't know if there are any others.
There we go. I got one wrong. It's quite difficult from a distance to measure. So if you have a video, if everyone can see you, and then after that we'll have a few closing remarks, and maybe we'll have Monica let people know what we're going to do next to help everybody out who's been on board today. But Mike, what's your question?
Okay, great. Well, thank you very much for the informative presentation. My question relates to funding that may be prior to the actual investment stage. And would your platform be suitable for looking for funds that may be suited towards feasibility type analysis? If you don't have it now, is that something that may be incorporated in the future?
That's a great question, thanks. In fact, the guy, Tom, who was from Nottingham, who asked the question before, was a grant expert, a European grant expert based in London. Oh, sorry, Nottingham in north of England. He's actually part Turkish or Greek and part Irish. He's an interesting mix, and he's got a very interesting handle on this, because often in many cases funding for sort of skunk works, you know, R&D and that kind of stuff is better suited towards grants. I don't know, what does BEDC do, grants as well as loans, or?
Sometimes.
Because in Britain we've seen a lot of this go on. In Europe there are a lot of, in America actually, there's one of our concierge members in Boston, a fantastic company, power company, battery company. I think they won't mind mentioning them, Helix Power. Brilliant company up there in Boston, is developing kind of sort of battery related technology, and they've already received, I think, over $1 million of grant funding from government in the States. You don't always think of America as being a grant type place. They've put that in their profile. that's an incredibly impressive thing to help. There's a battery-related technology business, great team behind that business, and that helps. And by identifying that on their profile, it helps VCs look at them. Although sometimes venture and private equity firms look at people who've got grants, saying we don't need to be a grant junkie, as they call it,
right?
Just getting grants, not actually running a business. But that kind of thing tends to suit grants more than venture and private equity firms. The difference, I suppose, on our platform would be in an area like biotech. Venture and private equity firms in biotech tend to back, like if you look at the whole COVID, I had the vaccination here, had both vaccines now here, and Bermuda's been fantastic. The British government supplied Bermuda here with vaccines. It's been well taken up here, and it's a brilliantly run program here. It's one of the best in the world run programs here in Bermuda. Seriously, been very impressive and very friendly, kind of impressive operation to watch compared to many other places that could have done it better. And you know, so there are biotech like AstraZeneca, you know, companies like that who came up with the Oxford vaccine. The Oxford vaccine is run by a lady who's a professor at Oxford. It's been partly funded by a friend of mine who's the head of COVID research in the UK, not research, called COVID response at the Medical Research Council in the UK, is a wing of UK government that funded the lady at Oxford to develop vaccines and treatments for Ebola in Africa and SARS. And apparently they backed her very early on, back in even end of 19, early 20, when this whole thing was bubbling up, to do research into vaccines. And that's how they came up with the vaccine so quickly. And that lady at Oxford has her own business, as well as being an Oxford professor. And she got a combination of funding initially from government, because it's so risky, that kind of stuff, and of various forms of government, and now has raised a bunch of money from some venture capital firms for further vaccines she's now developing based on the same kind of technology she's developed. So she's used like a kind of hybrid. So feasibility studies, you know, R&D, skunk works, biotech tends to be in the grant space. Venture tends to get into that when it's already some kind of proof of concept. No, it doesn't have to be all proven. Because often you get very early stage, and you've got some inkling, some sense there's something there. It's more than just an idea, usually with venture and private equity. Not much more sometimes, but more than that. So ideas and research tend to be backed by grants. We haven't done that so far ourselves. There are one or two platforms, for instance, in Europe that, or consultants who work around that. We will look at that. And actually, again, on Qodeo, when you're on board, we have a resource library that Monica manages that adds in additional sources of finance, and we do have a bit of information about things like grants in there. So it just got links. We don't have we don't sort them for you, but if you're in the UK, you know, UK grant giving bodies or those kind of organisations might be listed, or we can probably add, you know, if there's similar things in Bermuda. So there are some resources like that, but that's often where government does come in. Okay.
Hopefully that helps, Mike.
Yeah.
So it's a bit for ourselves, but I would still suggest you get on board, not just to get more subscribers, but because you'll get a flow of information, you'll be inside a trusted network, so I attend, and you'll be exposed to the kind of language and the kind of ideas of floating around the venture and private equity space, which is relevant. I think that's probably both exhaustive and exhausting for most people. Poor old
well
Jamillah.
Done to you, Simon.
So
I'm like, I didn't even get him any water. I feel awful.
Well, we'll have to have a drink. But those who know me know I could go on for hours later, but they've been spared. So we're very happy to receive questions by email. You know, you can go onto our site. We have a contact. If you go onto the site, there's a contact form there, and you can fill in some questions there, and you can contact us. We've got our various forms of LinkedIn page, Facebook page, Twitter page to follow, see what's going on. And I say, obviously, sign up for the product. At the moment, we're offering is 50% off. So 50% off is only you know, $5 in US dollar territories, or £5, for instance, in the UK per month. Then we also have annual subscriptions, which give us significant breaks. The annual subscription for the Pro product is £59.95 before the discount. So instead of £9.95 a month, or it's equivalent in dollars in dollar countries, and concierge is $99.95 for a year. If you use the 50% off coupon, that applies that as well, or should work. If everything is used onboarding, let us know as well. Always like feedback on that. So you can get a year's worth of concierge service for only $50 if you use that service. And if you think you could potentially raise hundreds of thousands or millions of dollars through it, or at least get informed about it, that's $1 a week. So hopefully it's worthwhile as a proposition.
It's a worthwhile investment.
Yeah. So thank you so much to everybody who came on board today. Thank you so much for Monica for staying up so late in Europe to help manage this. Sorry for your little technical glitch, but it went okay in the end, hopefully.
Yeah.
And thank you so much to BEDC and to Bermuda, because this is a fantastic place for entrepreneurs, and there's so much entrepreneurs are capable of here. We want to help them achieve. And it's a fantastic place to be based as an investor or an entrepreneur, because particularly this Global Nomad program that I found out about only last year when I was here, you can spend a year in Bermuda as long as you're covering your own expenses, basically.
Right.
Not a cheap place to live, but it's only 70, 80 minutes from the East Coast to US when flights are running. It's very safe COVID-wise, very organized from a COVID perspective with the right test and trace program. And it's a fantastic place to be, great light and great activities and stimulation. So, and we're doing what we can to help the community here, because it's been such a receptive place to us. I mean, if I hadn't had the COVID vaccine, I wouldn't be able to get out and about for the business in the way I will be able to now.
Right.
So that alone is a huge, huge thing. So we want to thank Bermuda and thank BEDC, and hope to work more with BEDC and help local entrepreneurs.
Yeah, I definitely will take you up on that offer. You heard it here. No, we're very happy that you were able to share your knowledge and your platform with us. And like I said, we really would like to create more opportunities for our code. And we'll see how we can work together to figure something else out for our stakeholders. Maybe we can support you in different ways and give others an opportunity who may or may not be able to take advantage of the discount code.
Sure, thank you. And I say that always contact us if you have any questions. And Jamillah is the point person at BEDC. Do you want to give out your details?
Yeah, sure. So if people are interested, first of all, you can go to our website. Most of the information is on there, which is bedc.bm. You can reach me at jlodge@bedc.bm or info@bedc.bm. I get those too.
Somewhere down here.
It's way down there. I don't know if you'll get to it, but info@bedc.bm. Monica's helping me out. Good looking out, Monica.
Can't buy your drink yet, Monica.
info@bedc.bm, and that will come to me. And if you have any questions or anything like that, please do feel free to get in touch with us. And I just want to say thanks again.
Well, thank you.
I hope you enjoyed it.
And if you enjoyed it also, there's even more to enjoy on our blog, because we've got not only blogs, but a radio interview I did with Jamillah and a lady called Shelley Thunder on Ocean 89, a local radio station here last week. And we've converted that into a YouTube audio. So you can go onto our site and listen to that if you're driving home. Hopefully it won't put you off too much. And you'll get to hear a bit of banter about what we do. And she's a very entertaining program called Business Matters.
Mind your business.
Mind your business. Mind your business.
Because if you don't, who will?
Exactly. So that's a great show here on the radio. And it's being broadcast obviously globally as well. So you can pick up some of these themes there as well, so perhaps more light-hearted tone than the presentation today. We'll make sure through Monica, we'll make sure that we get everybody reminder of the token. We'll get them recording of this as soon as it's available.
And any questions, answer any questions. Yeah.
Thank you for everybody's time today. Thank you.
Thank you.
See
Have
you
a good
all.
weekend.
Cheers. Thank you.